Welcome back to Lamb's Cryptoverse. Today I want to talk to you about how you always need to look behind the charts and understand them. And it's not explained even by professional organizations. And I'm going to give you a short example of what Glassnode has shown and what's really being said behind the numbers, behind the chart, I should say. So let's go to the screen. So this is what I'm talking about. Glassnode, move myself somewhere where you don't see me as much. Glassnode put out a newsletter and a video on exchange inflows and outflows. So basically, you probably know the basis of this. It's a good thing when there are outflows or net outflows from exchanges like Coinbase, for example, and Voyager. Maybe I shouldn't talk about Voyager, that's too painful, but Genesis and Gemini and some other ones. So, here's the deal. You're seeing here, and I've got my pointer, that we've got very low inflows in earlier this year and later this year because of the declining crypto in the stock market, and more recently in June, around June, May, June, the lunar crash. And you have to remember, it wasn't just the lunar crash. The Arrows Capital caused several companies and crypto-related firms like Voyager to go bankrupt. So what happened is investors removed their money from exchanges. They took it out. So that looks like a good thing, right? Because they're leaving exchanges, and that's usually a good thing because when you leave an exchange, you're usually hodling that Bitcoin. But I just want you to look at the data behind this chart. That's not, in this case, it wasn't a good thing. It's because people are scared. They're worried that, and it's right to worry. They're worried that in the TOS, the terms of service, it says in these centralized exchanges that once you put your money or crypto in those exchanges, they have ownership of your coins. So this is why people are taking money off of exchanges. So it's not necessarily a good thing. It's probably a short-term thing. And now we're going to go to the screen, the video of Glassnode. You could actually see for yourself what they said.
You can also see that we have both huge inflows and huge outflows every single day. This is 2 billion. This level here is about $2 billion. So we're actually trading somewhere around 1.75 billion on a daily basis of in and out total combined. But you can also see that generally speaking, we have seen a macro decline. We are also back here to late 2020 levels. So we really have kind of decayed a lot of that speculative interest as well. And much the same as our previous metrics, the massive drop off following the bull market top, and then we have a period of consolidation, and really a significant uptick of these levels is a good sign. So overall, again, we have a very, very cohesive picture. We don't really have retail. We don't really have speculators. There's just not a lot going on. It's pretty quiet. So when we see a rally from 20,000 up to 25, it's not seeing any follow through.
Okay, so let's go back. So what I wanted to talk to you about was, and this is the same chart that he was talking on the video. He's saying it's a good thing. We're at multi-year lows for exchange flows, and there's a lot of flows coming out of exchanges. But what he did not tell you, and I'm reiterating this, I'm saying this over, it's that a lot of the recent sharp decline in exchange flows is because investors were worried about losing their money in centralized exchanges, that those centralized exchanges, if God forbid they went bust, would actually take investors' crypto. Now, you would think they wouldn't do that, right? Because they're supposed to be custodians, right, of your crypto. But this is not the case. If you look at the terms of service, it's not the case. So that's all I want to say. So I hope you enjoyed listening to this video. It was just like a learning video that you should always try to understand what's behind the charts, even if the commentator, like Glassnode, is not explaining it to you. Thank you.